You made it. Oh, I hope you made it. I hope we see some of the same faces we saw before. Not to be funny, I was just saying. Uh, we did not go live last night. Well, we did have fun though. We had a private chat. Shout out to Kiana. Shout out to D. Shout out to all those that did join in the private chat. I hope you had fun last night. Whatever you did, I hope you're okay or whatever you did. I hope that 2021 was prosperous for you, and if not, let's make 2022 and those following years and in the months of 2022 prosperous for you. We are Women in Linux. If you don't know, now you know. You can find us everywhere on social media, uh, across social media at Women in Linux. You can also find us on our Slack. So if you want to find who we are, you hit up womeninlinux.org, hit connect, and then hit us up on Slack. You'll put your email address in here. You will need the Slack app. In order, you can also use Slack on your desktop and um, on your desktop or your laptop or your tablet. Best used on your not on your phone, but best used on your tablet. A lot of people ask us, "Are we going to create a Discord?" And I just don't see the need for us to have a Discord. I mean, I guess we could have one, just something else to manage. To me, in terms of uh, other places to connect with us outside of our Slack. It's maybe on LinkedIn and Facebook, but primarily we're always in Slack. Next thing, I think D is gonna take the shop down. I'm not sure when she'll make that announcement, but you still can get your products here. But that's gonna change pretty soon. And then if you want to donate, you can donate with your time. You can donate with your money via PayPal. Just hit the donate button via PayPal and let the donations rain free. All right. So let's get shout outs this morning. I see you out here. Hold on. I have it up on my tablet too. Alfred P, what's going on? Uh what's going on, JM? And what's going on, Miss Phoenix? You was in early before we even got started, giving us a big shout out, right? All right, so let's get going. I think everybody's probably still asleep right now. But let me see. I think for the second show, we'll probably let people come up on the second show. This show, I mean, you could come up on this show if you wanted to, but no, most of the time we'd be kind of crunched for time with letting people up. So let me get my notes out. I don't have my notes up right here. But because we got, I mean, we do have a lot to cover this morning, and we don't have a lot to cover, but I'm about to show you. So let me get this opened up with my notes, and let's get going. All right. So let's start with the billionaires this morning. Good way to start. Best part of waking up is Folgers in your cup, right? That's what they say. I don't know. I don't drink coffee, so you all let me know if that's true. Donald, good morning. How you doing? All right, so it says America's 12 richest people are collectively worth $1 trillion. This one came out. Let's see. Do you have a date? Yeah, December the 18th. But here's what happened to all their wealth and power when they die. And so we talked about on our last live about not even on this live. I want to say the last live. We've talked about this several times. When we're talking about transference of wealth, we saw that really on the last live when we were talked about the 1.49 or 1.5 million black men unemployed. If you missed that, we did that on what's today? Today's Saturday. We did that on Thursday. Right? That was that was 6 hours. Entertainment, I could say. Um, and several people have brought that particular article up as well too on other streams. Is really piss some people off as far as they're concerned, but you know, I just want to tackle the issue in a healthy way in terms of what's the solution. Not that I'm offering to help, it's just offering the potential solutions, right? All right, so let's get cracking. All right, so America's 12 richest people. Hey, Q Bill, how you doing? People are worth more than 1 trillion. Uh, and then where does their money go when they die? Um, it's funny that this I chose this article because when you are out here estate planning, looking at trusts, looking to see where money is going, that's an important piece when we're talking about wealth transfer. How do others get ahead? It's creating a solid foundation. Well, now I won't say creating a solid foundation, but having a solid foundation to start from. This is why I talk about what does it look like for each man and each woman to make $200,000 first, and then have that solid foundation, and then build from there. It's nothing like having a stockpile of money that's making you money while you go out and make more money so it can make you more money, right? Who wants to start from zero? At least I never thought we should start it from zero. But hey, if you choose that, there's more power to you. Just understand where it goes. Speaking of, and this is a really funny story. I'm just a mad rant right now. I was talking to one of my guy friends yesterday, and he's 76, right? And he talked about had he known what he knows now, he was like he would have chosen better when it comes to uh, picking a mate. In other words, he's like he's always picked someone who needed him for everything, right? And I agree with that. I know we all got to start somewhere. Somebody got to help somebody out, but there's nothing wrong with starting with someone who already has something. And whatever you define as that something, that's on you. That's an individual thing. But if you can start out with a running start at on a marathon, if you can start out ahead and not get penalized for being ahead, it's even better, right? I hope that makes sense to everyone. But let's get into it. All right. So in this article, they talk about they own islands, jets, and huge chunks of valuable companies. The insider examined what could happen to their estates when these billionaires die. The 12 richest people in the United States have a combined wealth over $1 trillion. Let me make this a little bigger. All right. A sign of the upper echelons of American society have accrued unfathomable wealth and power in recent decades, but at some point they would die, right? I talked about this too. You've heard me say this more than Tanya. At some point, their partners, children, and inheritors stand to see huge windfalls acquiring sprawling property portfolios. Repeat that again, right? Acquiring, and I think this is important right here because one of the greatest ways to get to wealth is through real estate, right? And we're gonna get into some real estate and some crypto on this, right? Acquiring sprawling property portfolios, major stakes in hope and high profile companies. We're talking pre IPOs, the investors, that accredited investor that I speak of, and overflowing bank accounts. And as anyone who's watched Succession knows, a potential for drama. All right, so the 12 richest people in the U.S. made up their fortunes through the technology sector or closely related industries. It means the fastest growing industry has the potential to create new aristocracy of wealthy Americans dynasties, along after the original breadwinners have died. I talked about this before, that giving pledge. I don't know if you ever looked up that the Giving Pledge and who's in it. I spoke on this before. Um, Oprah is in that too, but Warren Buffett, Melinda French Gates, Bill Gates are the world's wealthiest to donate to the majority of their fund. I want to say Tyler Perry also donates to that fund, if I'm not mistaken. All right. All right, so then they're like using the Bloomberg Index as a starting point. Insider examined America's wealthiest dozen people to identify who stands to benefit when they pass, their im- the impact their deaths will have on empires they built, and potential disputes and so forth. Right. So let's get into it. So here they're showing here, and I got to make this smaller so I can get all on one page. Billionaires net worth, their age. Warren Buffett is, I guess, he 91? Yeah, 91, worth 109 billion. All right. And then we have Jeff out here at 57, worth 243 billion. Elon at 194, he's 50. Jeff is 57. Mark is 37 at 124. Larry Page is at 128. Sergey Brin, who's 48, is 123 billion. Balmer is 116 billion. Larry Ellison, 119 billion. Jim Walton and his crew, his brothers, his siblings, 63 billion. Alice, 61 billion, and Rob, 63 billion. And the U.S. male life expectancy is 75.1, and the U.S. female life expectancy is 8.5. When we break this down into different races, it's of course for Black people that goes down. If you haven't looked at that, it does. All right, so uh, here we go. Alice, Jim, and Rob Walton. Right. Let's see. His son-in-law, and I touched on this on the last show. See, okay, let's go here. 77 year old Rob Walton's passing will immediately impact the retail giant. He still sits on Walmart's board, where he served for chair from 1992 to 2015. His son-in-law, Greg Penner, took over his chair in 2015. His younger brother, Jim, served on the board for more than a decade before his son, Stuart, replaced him in 2016. He now runs the Walton family office. All right, that said, about 49% of the Walmart shares continue to be held by the Walton family, including the estate of Sam's Walton's fourth child, John, who died in a plane crash in 2005. John gave half of his estate to charitable trusts, a third to his only child, and 17% to his wife, Christy. The death of Alice, Jim, and Rob would significantly change the shareholders' composition, depending on how they divide their estates among families, charities, and other groups. So I would go look at what charities are they involved with, to see, again, follow the money, right? Go look at what charities they are involved with to find out where that money is flowing to, right? All right, next up, they donated significant. The family has donated significantly to the Walton Foundation, another tax shelter, I should say. If you never looked at creating a foundation and what that looks like, and how much they donate, which then gives them allocations, the ability to have allocations to do other things, right? Worth more than $6.7 billion at the end of 2020, and Alice sits on the board. Now, I wonder if Alice actually gets a salary from sitting on that board. Can you get? Yeah, you should be able to get a salary sitting on the board, depending on how it's set up. Right? It's a foundation, so possibly, right? None of the Waltons signed the Giving Pledge. Jim and Rob have 7 children between them, while Alice, twice divorced, does not have children, preferring to do, preferring to devote her time to prize winning horses and collecting art. She founded the Bentonville's Crystal Bridges Museum of American Art in 2011. Alice has been the least involved with Walmart compared to her brothers. Cut the check. Warren Buffett, and I won't go through all of them. I'm just gonna go to the top four. I'm just gonna. That's it. Maybe the top three. All right, Warren Buffett. We know. I don't think Warren Buffett has any kids. Let me see. He's on the Giving Pledge. They already see some son. Blah blah. Observers of the Berkshire, where Buffett remains as chair. The CEO had played a guessing game about his succession plans in 2021. Buffett formally named Greg Abel the CEO of Berkshire Hathaway Energy and vice president of non-insurance operations of Berkshire Hathaway as his successor. The company did not announce a handover date. He does have kids. Buffett, three children, two philanthropists, Susan Buffett and Howard Buffett, are currently on Berkshire's board. The other, Peter Buffett, is a musician, so he has three kids. All right. Compared with his peers, Buffett maintains a relatively meager global portfolio. He Let me see. He lives in the same Omaha house he bought in 1958 for $31,000. He sold his vacation home in Laguna Beach for 7.5 million in 2018. Of course, that house should be paid for. And he doesn't buy expensive cars. I don't even think he buys new cars. He said he doesn't see the rate of return on that, right? Balmer, married to his former wife, he's married to Connie Balmer, his wife, for more than 30 years, and the couple have three adult children. Recent grad Aaron, strategic partner manager Sam, and product manager and comedian Peter. All right. So at least they have some children to lead that too. Does Larry have kids? Let's see. 77 years old, worth 119 billion. Let's see. When Oracle went public in 2007, Ellison and his family held 74% of the stock, including in trust for his two adult children, both filmmakers. Ellison has divorced four times. His most recent marriage ended in 2010. Now he owns just over 42% of the company per September filing. He did sign the Giving Pledge. That's why I keep telling you about the Giving Pledge. Go look at it. And it doesn't say anything like how much they're going to divvy up between the kids, right? So D could drop this link if you all are more interested in what they're doing, where their money is at, where their money is going, how to get into it. Let's get to the next thing. Everybody is fully aware that Johnson & Johnson is going to split, correct? I don't know if you saw this. This came out a while ago, but Johnson announced they would be splitting into two companies within 2 years. Johnson is built with a fortress balance sheet and has been able to pay a rising dividend for 59 consecutive years. So does that make them an aristocrat or a king? Do you remember that? Because this actually is coming up on my next thing that I'm actually bringing up. Right? Check out an aristocrat or king. What makes Johnson and Johnson? Which one are they? Uh, Drop it in the comments. You gotta come. You gotta know these things. These things I talk about all the time, right? Aristocrat and kings. Which one are they? If you don't remember, look it up. Go on Investopedia and look it up. What is an aristocrat and what is a king? I know what they are. Oh, they're an aristocrat. Somebody double check him. Let's go. Let's go do a double check live. I think I spelled it wrong. All right. So aristocrat. All right. Dividend kings is 50 plus years. I knew there was a king. Aristocrat is 25. So they are a king. They did 59 consecutive years. The company has a strong product line that fuels consumer products. That's what you got to remember. Years. Uh, you can think of Aristocrat as being fairly new to the market, but they've got 25 years here, if you want to look at it that way. All right. All right. Johnson& Johnson vision. Okay. Johnson& Johnson has a less than stellar year in 2021, and like many of us, they're looking to turn the page and on to the year 2022. The company was originally hit with a $4.7 billion lawsuit that was awarded nearly 2 dozen women who claimed the powder had asbestos in it, which caused cancer. Right? I don't know if y'all remember that. After the original amount was awarded, Johnson Johnson quickly appealed with the state of appeals, which dropped two of the women from the case and lowered the amount to 2.1 billion. Johnson Johnson once again appealed, and things were taken to the Supreme Court as they sought to undo the 2.1 billion dollar penalty against him, but the High Court rejected the appeal, and they would not hear the case. Pay up. All right, pay up. All right. So here we go. Big changes beginning with the split into two companies in November. Johnson and Johnson announced that they would be splitting between two separate businesses. But we already know um, Johnson and Johnson has the shot. I don't know who all got that, right? So what they're splitting it into. All right, Johnson Johnson operates with three segments: consumer health, pharmaceutical, and medical devices. And what you see here is should automatically come to your mind is research. Somebody has to pay for the research. And when we're talking about research, again, we can go back to what we were talking about with Eric Coffey, but government contracting comes under that too, right? R&D, right? When you go look at companies, you should be looking at their R&D. Like you can't you can't say Apple without saying they have R&D. You can't say Amazon without saying they have R&D. You can't look at Netflix without saying R&D, right? So research and development are very, very key factors when it comes to a lot of these companies. And when you start looking at what their research and research and development and how much money that they're putting into these things, you'll be surprised. But not only would you be surprised, is you get a chance to, whatever they publish, you get a chance to see where they're going, but you also get a chance to see what's coming down the pipe in terms of jobs. Excuse me, as well too. All right, consumer health, 3.7 billion, pharmaceuticals 13 billion, and medical devices 6.6 billion. If you want to know what the breakdown of two separate businesses will have the consumer health segment, which own products such as Band-Aid, Listerine, Aveeno, Neutrogena, and Tylenol. And the second business, although it will have more risk, will be made up of the faster growing pharmaceutical and medical devices. This is the research portion. This is their research portion, right? Medical devices. How does the customer react to devices? Are they healthy? Are they not? What about kids who need the medical devices and so forth, right? So be on the lookout for Johnson and Johnson. I'll just put them on the watch. Let's go to Yahoo Finance, and we can actually start looking at jobs at Johnson and Johnson. So let's look up. I'm assuming there are J and J. All right. How has J and J performed in over the year? Let's see. We had some spikes. We had a big spike here back in August, right? And we're down now from 170. From 177 to 171. Not too bad. It's not like Peloton. But I think Peloton's down. Is it 27% or 72%? All right. So that's Johnson and Johnson. So now let's go look at Johnson and Johnson. Careers. I don't think I need to go over who Johnson and Johnson is. I think you know who they are. So you don't think Johnson and Johnson has cloud stuff? Let's look and see. Let's close that. Life adjustment, diversity, inclusion, blah 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 blah. Blue articles. Explore careers. Let's do a search. All right, and that part looks a little blurry to you. Maybe that's too big. That's good right there. All right, so again, R&D senior engineer. They got 22,000 jobs, 22 plus. Let's go with engineering, and let's go with info. Let's see, quality, legal, strategic planning, non-employee. All right, so here, principal engineer, component engineer, project leader, IT senior analyst, business analyst of global medical affairs product line, ServiceNow, staff engineer, senior manager, cleaner utilities. Let's get this by a page of 100 that came up with, because I don't want to sit here and try to go through multiple tools, but PM, staff. Let me see if I can filter by remote. I'm just curious if they got remote on here. Let's drop down here to a R, see if we got anything. Nope. But they do have international locations, as we can see here. All right. Let's just go with United States. So we came back with 9 if I did that. Okay, in the United States, we got a staff electrical development, a director of ERP, IT manager, Blue Yonder warehouse management system, monitoring platform engineer, director of cybersecurity, data science and analytics, a manager of digital engagement, Workday IT solution lead. I don't know if y'all familiar with Workday, where they post jobs and so forth, and manager of process mining. What's process mining? What is that? All right, so let's see, application of process and task mining analysis technique in conjunction with other process improvement and data analysis. All right, qualifications, you need to have some Python, Jupyter Notebook, SQL, Solenoids, UiPath. Remember, we talked about UiPath. They went public this year. When we talk about no code, low code, this is what this is getting into. Six Sigma, black belt, 3 years of professional process improvement, and so forth. Right. So if this is something that you're into, check it out. All right, Johnson and Johnson, put them on the watch list. See where you're going with that. All right, let's go. Next up, aristocrats. All right, so let's try it again. What's the what makes a company a number? What makes a company be an aristocrat? How many years of dividend performance does the aristocrat need to be? All right, somebody drop the number in the chat. I'll wait. I'll wait, because you should know this one. All right, big bad bull. Ding ding ding. 25 years. You got it. All right, so this is just a theory, right? Um, of what they're predicting, what could be the best dividend aristocrat for 2022. Um, they are going off of all strategies are beating the NOBL in December, and also compared to the S&P 500 with this one as well too. So again, if you don't know what November was a sour month for dividend aristocrats, as NOBL, the dividend aristocrat ETF. I don't know if you're familiar with NOBL. Let's go back over here and look up NOBL. Right. This is a dividend aristocrat. Oh, did it come up? Yep, it did. All right. So for the year, this is what the dividend aristocrat has looked like. Just we see a incline here for the year, and reason why I'm doing out to a year is because we're in a new year, so we can really thoroughly see it. Let's look for the past 6 months. We had some dips here, but then we had a big dip here. That was in December the 1st, and then we shot back up. Right. All right, but for holdings for this particular aristocrat, let's look at the companies that the top 10 holdings: Nucor, Target, Expeditors International, ExxonMobil, T. Rowe Price, West Pharmaceutical, Franklin Resource, Roper Technologies, Centos, and Cincinnati Financial Group. These are the top 10 holdings that they're reporting here, right? And then they talk about what this particular ETF is invested in: basic materials, consumer cyclical, financial services, real estate, consumer defensive, healthcare, utilities, communication services, energy, industrials, and technology. Right. So those are some of the things that they're in, and then the performance. So year to date, it has returned 21.8%, a yearly daily total return of 21.48%, and a 3 year daily total return of 17.13%. Would I invest in this ETF? Absolutely. Anything above 10% for me is good, right? Especially when we're talking about over a 3 year time span, right? 3 to 5 years, 10 years, depending on how long you want to hold it. But it seems to be pretty consistent on the hold. It apparently is not older than 10 years, because on the 5 year mark they got it at 13%, which is still pretty good for a whole. It looks like here it's saying trailing returns versus benchmarks. It's showing that here a year of 37.56%, right? So, see, in 2019, the annual return was 27.45, 8.32. I don't know if it's been calculated. It might have been calculated. I don't. Well, for it ain't been calculated for 2021. It hadn't been calculated. So I don't know what 2021 is going to yield for that. But it looks like to me, I would put this on my watch list as a buy. This is not financial advice. These are just things that I would invest in that's returning over 10%. These are just my opinions, right? This is not financial advice. All right, so we looked at the NOBL. It's what they're comparing these dividends, not dividends, these well, aristocrats that they're predicting being compared to, right? All right, so the Dividend Aristocrat ETF shed 1.7% during the month. This meant that we would need an exceptionally high return from the fund in December, right? And so that's okay, but it's up 7.14% through December 29th, inclusive of its dividend payment this coming Friday. This was posted on December the 30th. All right, so this is recent. All right, let me scroll back up, then we'll go through those. It says this place Noble's year to date return on 25.32% for ETF. Right, the fund needs an additional 1.3% to push to 26.94%. So it may be on rate. If we go back here and we looked at the performance, it may be on rate as it was in 2019 of 27%, right? It's possible between 26 and 27%, which is good on a return, right? The next thing that they're touting here, if you asked me a month ago, would if the record would be beaten within a year, I would have said no. However, I think within the current volatility in the market, setting a new record return in 2021 is very likely. All right. So there are 20 individual dividend aristocrats that are having an excellent year with a return of above 30%. Now, this one, the NOBL ETF, is returning around anywhere from, we've seen anywhere from 25 to 27%. All right. And that 25 and that 27% was in a year, right? Not in the 3 year, right? In the 3 year, we see they're predicting, or they're saying it's going around about 17. But if you get 27% in a year, that's pretty good, right? All right, so let's go. Nucor, which was in their holdings, in the NOBL ETF, is ticker symbol NOBL, contains Nucor. which is has a return. It's a dividend stock. It is a king. What is it? A king? No, it's aristocrat. We're doing aristocrats. It's an aristocrat of 102.43%. Um, I've never heard of Albo Marlell or Marley, I guess you want to say, of 81.1%. I'm not even sure what they do. Well, let's go, instead of being ignorant, let's go check them out. What do they do? Global Specialty Chemicals Company. They are a chemicals company. Um, they deal with positions in lithium, bromine, refining catalysts, and applied surface treatments. And they look like they're over. Let's see, here's Palestine, and so forth. So let me see. Yeah, they're overseas. All right. The next company is West Pharma, and you can click on it here. It pops up and shows you right there how much they're trading for at $469. This one is trading at 233. This one is trading. Oh, I can't see it. I don't want to make it big because then I lose it. Lowe's is returning 54%. Exxon 54%. Lowe's $258. Um, oh God, I hate when it does that. Let's go here. XOM. XOM is 61.19. And then if you look at it for a year, we got some. So now, what does it look like for 5 years? Oh, look, it's got a big dip. So you got, if it's dip, it'll be a good time to buy, right? Because it's low compared to what it normally is up here in a year, right? Year to date, not too bad. But you could probably find an energy ETF if you wanted to look for that one in, right? All right, next one up is FRT, Federal Realty Investment Trust, A.O. Smith, A.O. Smith, AOS 46, and Essex Property Trust, and the list goes on here. I won't go through all of them, but you can see like the top ones up here. Let's go right here: Target, Pentar, Chevron, Essex Property, Lowe's, West Farmer, I guess Alber Marley. I guess Alber Marley. Probably totally screwing that up. And then Nucor. I would look at Nucor, right? All right, so these are the aristocrats that they're predicting, and you can see they're predicting for them to return over 30%, which is pretty good. And these companies have been around more than 25 years, but you can always look at NOBL. It's under 30%, but it's still got a good return of 27%. And drop a one in the comments if you understand what I'm talking about. All right, let's go. I'll leave that up in case I may have to come back to it. All right. Yellowstone Acquisition Company announces an additional 45 million common stock PIP subscription for Sky Harbor business combination, bringing a total to 100 million. We talked about Sky Harbor a little bit, but Sky Harbor Group LLCs agrees to waive the minimum financing condition to complete the business combination. Yellowstone Acquisition is ticker symbol will be YSAC, YSACU, and YSACWW, meaning for warrant. I'm not sure what the U is for. A special purpose acquisition company announced today that the Boston Omaha Corporation, through its subsidiary, and this was December 22nd, LLC has agreed to a $45 million PIPE financing in connection with closing of the potential business combination with Sky Harbor, SKY, in addition to 55 million Series B investment that will convert to common Class A stock completion of the business combination. All right, and so they go into. Let me jump down here. They talk about Sky Harbor and then Yellowstone. Yellowstone is a blank check company formed for the purpose of effecting a merger, share exchange, asset acquisition, stock purchase, reorganization of similar business combination with one or more businesses. In October 2020, the Yellowstone Acquisition Company consummated a $136 million initial public offering, meaning they IPO'd, each unit consisting of the company's Class A ordinary shares and one half warrant, each warrant enabling the holder thereof a purchase of one Class A ordinary share at the price of $11.50. So let's go look up YASC and what's going on with what happened with them. What's going on with them? Here we go. All right. So again, one day, I think they kind of combined because this don't look like it's gonna change. Let me see. Oh, it changed. It took a spike up. I wonder how long they've been on the market. I don't think I know they ain't been on a year. 5 year most definitely not. So year to date, we got some ups and downs. So look, so October, they went public in August, October, and they've been increasing over time, right? So you can check them out. Why Yellowstone Acquisition Company, and you can look them up to see what they do. Here we go. Yellowstone Acquisition Company announced a transfer of common stock. Yellowstone Acquisition, blah blah blah. Let me see our team domestic filings. Let me see. Do they talk about what they do? Here we go. Right here. Let me look. All right. About that's Sky Harbor. About here we go. Each unit. They just talk about the units. They don't talk about exactly what they see. Yellowstone, led by Adam Peterson and Alex Rozek, in a blank check and form for the purpose of entering blah 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 blah. Okay, so reorganization, blah 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 blah. Initially focused on potential combinations in home building, manufacturing, serving the home building market, financial services, and commercial real estate industries. So they have a potential to keep moving forward because the home real estate business, not home real estate, but the home, the real estate business in terms of building houses and so forth is still booming. I just don't see that slowing down. All right. All right. So next up um, is this. Remember, that's why, yeah, you got to go across the symbol, the ticker symbol. I may invest in that. All right, Morgan Stanley. Let's see. Morgan Stanley states that the market is underestimating the inflationary surge from the Great Resignation. Here's two ways investors can tap into the trend as employees ditch the 9 to 5. The worlds of content creation, NFT, and stock trading. All right. We talked about NFTs before. We talk about stock trading all the time. We just talked about that. And then content creation. All right. All right. A news report, Morgan Stanley surveyed 12,000, over 12,000, almost 13,000 Europeans about working habits. 36% of the earning additional income from e-commerce and content creation platforms, with 41% planning to exit the workforce in the next 2 years. All right, so we talked about content creation. We're gonna really kind of get into to some of this. Uh, Probably the next one I'm gonna show you about. If it's not on this one, YouTubers and TikTok content creators and what they're making. Um, but analysts think most important that questions have been missed with the unsought with the sought to answer them in November 24 research report that based on the survey of 12,000 Europeans from Germany, France, Italy, Spain, and the UK. Right. All right. So here, the Great Resignation, la 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 la. All right. The creator economy. Content creation includes social media influencing, podcasting, live streaming, gaming. I guess they mean live streaming gaming or live stream gaming. People are earning additional income through e-commerce stores where individuals can sell their own creations, and Web 3.0 where creators earn money from NFTs or play to earn games. Right. So let's see. Content creation platforms frictionless, blah blah blah. All right, 80% are full time rather than temporary. They're predominantly under 35, typically earning between are these euros? I'm assuming 20 to 40,000 or over 70,000. They work in offices and typically in IT, finance, engineering, and manufacturing. We could say that's true for the U.S. as well too. Uh, and it says the wage inflation, even if a number of people come back to the workforce, the disruption and the wage inflation will likely still persist. Younger generations becoming more expensive to retain. All the ages generating supplementary income from these content creation platforms. About 2/3 are Gen Z or millennials. Right, higher earners exiting the traditional workforce, excuse me, those exploring these platforms for supplementary income who would therefore be susceptible to fully exiting traditional work in favor of creating favor of creative platforms, from NFT to trading, large risk of wage inflation, and how to play the trend. What do you do to play this trend? Let's see. Analysts say have a sell recommendation on Page Group, which is based on D rating as growth normalizes. However, if the Great Resignation trend persists, then they will note that there would be a risk of their underweight call. The Great Resignation doesn't end, and we're in for a structurally tight labor market, meaning you can call your own shots when we're talking about this. We could favor Hayes and Page over Randstand and Adecco for this cycle. So that just give you an idea, and this is in the UK. We already seen it. If you look back up here at the top of the article, where they were talking about in the US, 4.4 million uh, unemployed or left. I wouldn't say they're unemployed. Yeah, a record 4.4 million Americans quit their jobs in September, right? Not coming back. Some of them are not coming back. I thought this article was interesting. Is who's I don't know if you ever heard of this. It's called Stellar Pizza, but they're three former SpaceX engineers. This is the when we talk about networking at your job, this is one of those things where you are working with people. You all sit down, y'all may come up with an idea, whatnot. You have money because you worked on a SpaceX project. You know how business works. You know how to get some funding and so forth, and you go start your own thing. SpaceX engineers have launched a robot restaurant that makes pizza every 45 seconds. Take a look at it. Stellar Pizza has more than 23 employees who used to work for Elon Musk's company. Poaching is real. I've talked about this before. Um, especially when you can prove what you do. That's why I always say get your skills up, stack your skills. You can go wherever you want to go. Three former SpaceX employees have made a pizza making robot machine. The machine can produce pizza every 45 seconds. Will be operational or in operation next year. Stellar Pizza has 23 employees, all that came from Elon Musk. Here is the pizza. The company was founded in 2019 by Ben Tsai, Brian Langon, and James Wahasin. Um, the Here's the I guess the stellar pizza maker here. Uh, I started looking at this as no code, low code is what I look at. They spent 5 years at Elon Musk company where he designed advanced battery systems for rockets and satellites. He rounded up 23 former SpaceX employees to build an automated touchless pizza making machine that fits into the back of a truck. All right. Stellar Pizza robotic machine can make and bake and top a pizza in under 5 minutes. The first a ball of homemade pizza dough is put into the machine where it gets pressed and molded into a round shape. Once the dough is ready, the machine tops the pizza off with sauce and other ingredients. The raw pizza is inserted into one of four high temperature ovens in a robotic machine. Once one of the Pizza's employees is SpaceX former chief, Ted Sema, who formed the rocket company's food service program for staff per his LinkedIn profile. Sema teamed up with a pizza consultant, Noel Bronner, in an effort to make high quality and affordable pizzas for Stellar Pizza. The company offers a pepperoni and supreme pizza. Alternatively, customers can build their own pizza with fresh toppings, including onions, bacon, cheese, and olives. Stellar Pizza, 45 seconds. And they have a truck. So I guess they can go do food deliveries, right? All right. Let's get down here to Blue Origin. I got about 5 minutes left. All right. Mysterious winner. This is what I thought was cool. All right. The mysterious winning bidder of the $28 million seat on Blue Origin rocket just revealed himself and plans for his own space campaign. $28 million to get on the Blue Origin rocket. He paid for it, and here's the winner. He is the tech crypto entrepreneur Justin's son. Said on Twitter he was Blue Origin's $28 million bidder. Uh, Son said he plans to fly to space next year with Jeff. The guest will be announced in the coming year and will include crypto and tech leaders. Right? He is a technology and crypto entrepreneur. He won in an auction. Son paid 28 million to fly to space in July with Jeff, but backed away only a few weeks before the flight due to scheduling conflicts. At the time, the space venture said the bidder would fly on a future trip. I was like, what if they gave no refund? Um, and Son spot on. I just lost it. Just rotated on me. Where it go? 6-person sunspot on the 6-person rocket with an 18-year-old Oliver Daemon, the son of the CEO of Summers Capital Partners. Blue Origin told Insider that Son's $28 million bid was used towards the company's nonprofit Club for the Future. So they donated 28 million to a nonprofit called Club for the Future. On Wednesday, 31-year-old Son said on Twitter that he plans to go to space on Blue Origin in the fourth quarter of 2022. Again, go look up at Son how he make his money. Son said on Twitter he will be personally select 5 individuals as part of the campaign called Sea of Stars. He said his first nominee will be a leader in the crypto world as well as the metaverse. The nominee names will be released gradually in the coming year and include a mix of leaders in his Tron DAO. He has a DAO crypto community, leaders in technology, art, as well as high visibility and socially influential celebrities, according to some. No, you probably have never heard of him. That's why I wanted to mention him, that he paid $28 billion for the seat. Uh, and you see what he's invested in as well too, technology and crypto. So there you have it. All right, let's get to this. Last but not least, I think this is it. Yeah, this is the last one. All right. Here we go. Crypto experts told us they're investing. Nine crypto experts told us their investing outlooks for 2022 from Bitcoin price predictions to high conviction altcoin picks and what's next for regulation. All right. 2021 will be a 2021 has been a wild year. If its value surged from 2.3 trillion to from 800 billion. Experts expect seeing growing crypto adoption and decoupling between Bitcoin and altcoins. Right. By all indications, 2021 has been a wild year for cryptocurrency. Blah blah blah. All right. Bitcoin reached a high of 69,000. What is Bitcoin trading at today? 50,000, 54,000. I don't even remember. I haven't been keeping up. And the digital currency is currency to balance to their balance sheets. Let's see. Ethereum, the second largest cryptocurrency, has soared to an all new high. And who's in Ethereum? I am, but who else? By explosive growth in the decentralized finance, NFTs, and metaverse related network. Right. Let's see. Coinbase, layers. They talk about Solana, Avalanche. Anybody was watching Algorand this weekend or Algorand this weekend? Was anybody watching that? Well, not this weekend. This week. Jump from a fray of competing to be the fastest, lowest cost, most scalable platform for developers. They were looking at Algo. It was like don't sell. I was watching some couple of videos about it. Enthralled by the bonanza of opportunities in the crypto land, venture capital investors poured $30 billion into blockchain companies and are eager to usher in the so-called Web3. Right. In 2021, scammers pilfered $7.7 billion worth of cryptocurrency. Did y'all see that article where that guy lost? I guess he lost his crypto wallet, and and it got, I guess, transferred. He threw it in the trash and it's in a landfill. And he looked for a whole year in a landfill, trying to find it. It's worth 350 million. Anyone see that? Right. While talks of impeding crypto winter have surfaced recently, analysts, investors, and industry executives are expecting to see a continued mainstream of crypto into 2022 as stadiums get renamed after crypto companies and NFTs continue to mesh with pop culture. Right. So we see what's going on, right? We kind of touched on everything. Aristocrats. We talked about dividends. We talked about what we're seeing from the crypto side of things. We also talked. I even touched on real estate. We saw about how the billionaires are transferring their wealth and so forth. Got to plug up my laptop before we die. We also saw uh, uh, the market in terms of like where people are investing and so forth. Last but not least, I did want to mention this, and this comes from Deal Machine. Does anybody drive for dollars? Anybody know what I'm talking about when I say drive for dollars? Put in the chat what I mean about driving for dollars. D, you don't put nothing in the chat. We know you know. What does it mean when I'm saying drive for dollars? Have you ever heard that term before? Donald Watts, no. Uber, nope. You can use Uber, but I wouldn't. All right, so driving for dollars. D, put in the chat what driving for dollars is. All right, so typically speaking, um, driving for dollars. Anybody do wholesaling? Let's ask that. Let me ask it a different one. driving for dollars. See, so this is by no means a real estate advice, but driving for dollars is literally going around and driving for dollars, right? We use that to go and look at properties, looking for different things on as you're driving for a property, right? So when we're talking about driving for dollars, we're talking about you may be looking riding down the street looking at properties to see if the grass has been cut, uh, as we say, a janky fence, or a property that looks like nobody's there. Vacation properties, you'll see those often if they're not well maintained, or so forth and so on. What's going on, Courtney? How you doing? Again, it's not just driving for houses. It could be driving for apartment complexes for sale by owner. It could be driving for lots, looking for a place to build. You may go driving for dollars, looking at land and so forth, right? So deal machine is one way to use when we're talking about driving for dollars, when you want to do a campaign or get the owner's attention or so forth. And I won't get into skip tracing, won't get into all of that. We should do all of that on Binary Hustler. All right, but what I did want to mention was this right here. All right, they had a email that actually came out, and I should share this email. Let me go to my email, and let me do. It's on my other emails. So let's go here, and let me do deal machine. I got it in my notes, but I think I should do this a different way. Let's see. Oh, I don't have it here. All right, that's fine. I'll mention it here. All right, so what it says investment property purchases are increasing relative to other, showing strong investor focus as we head into inflationary times. Investors bought up to 18.2% of homes in Q3 of 2021, with a reduction in first time home buyer purchases. And 2022 is going to be a good year for real estate assets, with one of the marketplaces predicting an increase of 13.6% in prices between now and October 2022. Right? And I want to find that so you can read it with me. So you're not like, oh, is she making that up? It's all cap. No. So what does that say for you, and why do you care? Well, you should care. Well, I just showed you that company. Was it YSAC, doing home building and getting that big infusion. These things tie together. We got to start looking at, I would look at lumber. What all does it take to make up a house? Um, Appliances, those appliances that go into a household, uh, where we get furniture from, uh, you know, home builders, like groups that build homes. I don't see BlackRock, Blackstone, and them slowing down on purchasing homes and stuff. So again, when we're looking at it, you have to look at it from a perspective of if we're building homes and people are buying homes, right? So that's just something to be aware of. So let me go over here one more time to my email and see if I could do a search this way. Oh yeah, not that email. This email. Let's see. We'll come back. All right. All right. So yeah, here it is right here. Right here. Let me blow this up. All right, so here, why so many investors? There has been a serious rise in investor activity over the past year. Why? Because real estate is one of the best asset classes around and shows the strength of the sector is going to be strong in 2022 as well. So it's not too late to acquire rental properties. Investment property purchases are increasing to a relative to others, showing a strong focus on investor. I talked about this. Investors are. New Redfin data shows that the real estate investment is on the rise and for a good reason, boosted by strong rental returns, low interest rate, and inflation expectations. In Q3, single family rentals made up 36% of housing purchases. The areas with the largest market share: Atlanta, Phoenix, Charlotte, Jacksonville, Miami. In total, investors bought a record 18.2% of homes in Q3, up from 16.1% and 11.2% in Q3 2020. Right? And that's from Redfin. And they're showing here on this, they say investors buy up a record of 90,000 homes in the third quarter. 90,000 in the third quarter. So these are the years, and you can see we got a dip here. Whatever this Q3, that was 2020, of course, and then we came back and we're on the rise and continue to rise. It's predicted to be higher next year than we are now, right? Foreign real estate investment is on the rise, as well as travel restrictions, according to JLL. Global real estate investment has eclipsed pre-pandemic levels, with US $757 billion invested in Q3, the highest investment ever in a 9-month period, and is 4% higher than the previous. Right. CNBC reported a new National Association of Realtor (NAR) data as well that shows the investors made up 17% of buyers in October. Remember when I said that first-time home buyer purchases are down, people are purchasing second homes, and we see that. If you live in Florida, you see that. If you live in Atlanta, you see that, where they only made up 13% before and 14%. First time home buyers shrank 29% of buys in October compared to 32% a year ago. This means more will be choosing to rent instead of buying. I would say it's a great time for a multitude of reasons. One reason, if we have so much money being put into the economy by the Federal Reserve, you're going to see prices continue to escalate, including rent. So if you're not buying, you're renting. If you're renting, it's going to escalate on you, right? We are, and I showed the inflation numbers of home rentals. Well, home rentals was the number two inflation. This goes in hand with that report that I showed last week, right? Where number one was up 51% was gas. We talked about energy earlier, right? We talked about energy earlier. Home rentals, reinforcing that again, what it looks like is up. It's going to continue to grow. So energy, gas, or I will say gas, just say energy, and rentals. So what is that? What does it take to have a rental? What type of rentals should you be looking at? Should you be looking at a duplex? Should you be looking at a fourplex? Again, I go back to what I said before. We have strength in numbers. Creating an investment group. You'll say, Tameika, I don't have any money. And I talk about jobs, and I talk about how to get trained up. We talk about skills. I think we beat that up over here. I think everybody should be sore from throwing skills at you all the time. You get Linux and Terraform and cloud slapped in your face all the time. So again, with interest rates still historically low, there's plenty of room for investors to scoop up income producing rental properties in the coming year. As this asset class will continue to heat up, we saw the billionaires have their asset classes in real estate. We know that. Has anybody ever been to Billion Dollar Row in Aspen? We're gonna talk about it on the next show. I just want to know if you even knew it existed, right? 2020 home price growth, according to predictions from Zillow. We know we can't always trust them though. Home values are expected to grow 13.6% between October 2021 and the same time next year, ending in 2021, up 19.5% from 2020. All right, with Redfin 2022, in Redfin's predictions report, here are a few interesting quotes for 2022 that investors should note. Mortgage rates will rise 3.6%, bringing price growth down to earth. New listings will hit a 10-year high, which will hardly make a dent in the ongoing supply shortage. Rents will raise by 7%. So, if you want to stay in a rental space or expect an increase. Condo demand will take off. Home buyers will relocate to affordable cities like Columbus, Ohio, Indianapolis, and Harrisburg, Pennsylvania. Harrisburg has been going off the chain. People been relocating there left and right, left and right, over the Sun Belt, right. So again, I'm just giving you a different perspective of where, again, if we're talking about rental rates going up, if we're talking about new listings for homes, and we're actually in a shortage. Again, appliances, people need appliances. People need handyman work. People need work done around not just the house but around the property itself. If you're looking to say invest into lawn care, maybe buy a lawn care service and scale it and then sell it. Find someone who wants to sell a company. You There are plenty of companies out there that want to be sold. Look at who their customers are. Buy the company and then turn around, scale it, and then sell it. Fix the problems, automate the processes, and then sell it. Turn around and sell it, right? Get it low, get it profitable. If it's not already profitable, increase it and then sell it, right? Um, that's all I had this morning. I hope this works for you. Yeah, we'll talk about the Billion Dollar Row in Aspen. Um, I have plenty of information on the second show, how we Linux. Be ready, take notes, be ready for what's about to happen. I'm trying to give you a line of what's coming down, what you're gonna see more coming down the pipe in 2022. Congratulations, you made it. We gotta make sure we stop saying 2021. We're 2022. Uh, I recommend you do research, period. Seeking alpha may not be one of the things. I like it because it gives different perspectives from different people, and the people who write articles who are currently investing meet daily to talk about um their strategies, the why, their portfolio. um they do deep market research on a lot of things, a lot of articles. Um, and it's funny, if people were on last week, you should understand what seeking alpha means. Remember when I talked about the last week about the different Greek letters, alpha, beta, and what those things mean? Well, here it is. This is what alpha means, seeking alpha. Remember, we talked about this. I don't know if you do. I'm gonna go back to it. Investopedia, alpha, right? Right here. What's the difference between alpha and beta, right? Alpha and beta are two of the key measurements used to. D, you can pull this up on the screen. Used to evaluate performance of a stock a fund, or investment portfolio. Alpha measures the amount that the investment has returned in comparison to the market index of the or other broad benchmark that is compared against, right? And beta measures the volatility of it, right? So we're seeking alpha. Is again funny how the name correlates with alpha that we talked about last week, and this is why it's called seeking alpha, so forth. Both see, alpha shows how well or badly a stock has performed in comparison to a benchmark index. A high alpha is always good. A high beta may be preferred by an investor in growth stocks, but shunned by an investor who seeks steady returns and lower stock risk. So we're always seeking alpha, because seeking having a high alpha is always good. If you didn't learn anything today or any other time, we're seeking alpha, right? I hope that makes sense. Oh, hold on, D saying something to me, right? Seeking alpha, got it. All right, so let me see. Alpha always show. Yep. And there's a calculator out there, like how to calculate alpha. We'll have to do this on another show. This is I don't want to say this is not financial advice, because I'm not giving you financial advice here. I'm just talking about it right here. In here, I looked this up earlier. I was gonna show this, but I didn't want to show this because I think it's gonna get into the weeds, so I didn't want to show it. But alpha, it talks about. Oh, come on now. Alpha is a measure of performance of an investment as compared to a suitable index. Usually, they compare it to the S&P 500. As an alpha of one baseline value is zero, shows that the return on investment during a specified frame outperformed the overall market average by 1%. A negative alpha number reflects an investment that is underperforming or compared to the market average, right? And so then they get, if you scroll down here, they have this right here for. Therefore, alpha equals this, and I didn't want to get into that. Right? They get into it. R represents the portfolio return. RF represent the risk-free rate of return. Beta represent the systematic risk of the portfolio, and R sub M represents the market return per benchmark. I didn't want to do that to you, because that there's more into that, because you're like, where did these come from? So then you have to get into that, and to me that's a class. So we should set some time aside to talk about that. There is a couple of books out there, when we're talking about alpha. Let me pull it up on Amazon, because I actually ordered the book, and I'll tell you the book that it is. um it's in my old orders. Let me look at alpha. Look that up. Let me see. Does it come back? Nope. Let's look up Greek. Okay, this is the book here. Trading option Greeks, how time, validity, and other pricing factors drive profit. This is a book from 2012. How do I know about this book? One of my old managers, we talked about trading stocks. He created his own platform to do fractional shares. Is him and a group of his friends they created their own trading platform, and this is what they do. And so there's this book he recommended to me, and they actually started showing me how to use alpha to and basically the Greeks, in order to Pick the best stop, learn how to trade and so forth. Again, networking with people. Okay. Let's see. What is decent? Oh, coming. All right, cool. All right, so that is something that you can get into if you're interested in that book. It comes from Bloomberg. It's from 2012. It just talks about it, right? They got a little description here. I blow it up some so you can see what that is, right? Um, and yeah, you can get it on Kindle if you want to, and then they have it used as new and used here. So, well, folks, that is it for right now. Um, we're gonna see you again at 2 o'clock, where we'll be talking more about fun stuff. You'll be able to come on stage. I hope this makes sense to you. I hope you see where the market is going. Again, the my other I didn't we didn't really talk about a lot of technology, but the technology still exists in terms of what's coming in. It's still space. It's still edge computing. It's still CICD. Uh, Data is going to always be there. Data engineering kind of well, not kind of, it does. It coincides with CICD and so forth, right? See you again at 2 p.m. East Coast time. Have your pen and paper ready. Make sure your camera ready if you're going to come up on stage, or at least have the crust out your eye. We don't want you on the platform looking crazy, for your own edification. All right. See you again at 2 o'clock.